Hello and welcome back. Today we are going to cover the most important topic, which is daily bias and aligning yourself with the higher time frame institutional order flow. The primary focus of trading with higher time frames involves stacking probabilities and applying sound risk management, as nothing is guaranteed to be 100% accurate. Traders must avoid analysis paralysis by maintaining simplicity and strategy. Aligning with the higher time frame institutional order flow is the foundation to achieving profitability. Everything falls into place once you are aligned with the higher time frame institutional order flow. As all of us know that the trend is your friend, which highlights the importance of following the major trend indicated by higher time frames. The analysis begins with monthly charts, then moves to weekly, and finally daily charts to evaluate clarity and direction. First of all, we start with the monthly chart and try to predict that where is price likely to go and whether we are in sell program or buy program. If the monthly chart is not clear and prices looks choppy, then we drop down to the weekly chart and try to find the direction of institutions. And if the weekly chart is even not clear, then we will hop onto the daily and we will try to find the opportunities to enter off of a trade. So what do we need for correct bias? So we are covering 5 topics here in higher time frame analysis. 4 crucial aspects we need to focus on. Premium and discount levels within trading ranges. This is very important, and always look for sell setups in premium and buy setups in discount area. Then we go into talking about the key levels you have to look for order blocks, breaker or fair value gaps in the premium or discount areas. Then thirdly, we go into talking about external and internal range liquidity. Remember, price always move from internal to external and external to internal as it's break through the old lows and highs and rebalance the imbalances like fair value gaps. And the fourth is higher time frame SMT, and the final check is shifts in market structure or change in state of delivery. So this is our higher time frame trade protocol, right? For bullish scenario, we need to look for bullish draw on liquidity, then always mark out the premium and discount for the range, and we want to be in discount of that range, right? Then look for internal range liquidity pool for our draw to go higher into external range liquidity. And inside that internal range liquidity and discount, we need to see SMT form. This is very important. And in this discount area, we want to see wick below and the body close inside the previous candle. And for a bearish scenario, we need to look for bearish draw on liquidity, then always mark out the premium and discount for the range, and we want to be in premium of that range, right? Then look for internal range liquidity pool for our draw to go lower into external range liquidity, and inside that internal range liquidity and premium, we need to see SMT form. This is very important, and in this premium area, we want to see wick above and the body close inside the previous candle. Utilizing these concepts forms a protocol for both bullish and bearish scenarios, guiding entry and exit points by identifying liquidity draws and range conditions. Application of premium and discount. In bullish scenarios, traders seek a bullish liquidity draw and work within the discount range, targeting internal and external range liquidity. An SMT formation at a swing low in the discount range is crucial, visible when the candle wick dips below a previous candle's body and closes within it. Similarly, bearish conditions require a liquidity draw to premium levels, where internal range liquidity leads towards external liquidity targets. Observing SMT at swing highs, where the wick moves above the previous candle and closes within the range, is critical. Now over here we have schematic chart, and what is important, as firstly we talk about the premium and discount of the range. We have got a higher time frame old high, or a fair value gap here, and a higher time frame old low, or fair value gap here. Now we wait for price to come down to the discount if we are buyer. And what is going to be important here is SMT to form inside that internal or external range liquidity. It can be either forms on this low or in this low, but it's key that there is SMT form at higher time frame, key levels for the change in state of delivery and or the market structure shift. So never sleep on SMT. If there is no SMT there, no trade simple. Same thing over here for bearish scenario, right? A higher time frame, old high, or fair value in premium, which is either internal or external range liquidity here. And if the price hits the internal or external, we want to see SMT to form either on these highs or in these highs. And this is the key for valid market structure shifts or change in state of delivery. So we got US dollar Canadian dollar monthly chart. So we will start off with monthly on the higher time frame, right? From monthly to weekly to daily. So let's see what is happening over here. First of all, what are we going to do? We're going to mark out our premium and discount, right? This is very important. We want to know that we are in premium for sells and or in discount for buys. So as you can see, we are in the premium zone. What is happening over here? We need to look for external or internal range liquidity. So we have this premium old high that price has took already. So we rate on external range liquidity and we are in premium zone. So what are we going to do next? Think about previous slides, external to internal and internal to external. So as you can see over here, this monthly candle took previous old high, which is our external range liquidity. Now after external range liquidity, what are we going to be looking for? We got eyes over here, which internal range liquidity. So we map out this fair value gap. And this going to be our draw on liquidity for whole entire month. And we will only look for sell setups for the whole month. So what are we going to do next? We look for SMT over here, which make the setups high probability. So on these high, it create SMT with dollar index. So we start on the monthly. Now we're going to drop down to the weekly chart. So what is happening over here? We got monthly external range liquidity rate over here, and we got draw on liquidity, which is the monthly fair value gap. Now what are we going to waiting for? CSD change in state of delivery or market structure shift over here. So we got this bullish candle rated an old high, and this important that body of the bearish candle close below that candle, which rated the external range liquidity. Now this is a high probability order block. Why? Because it's took the external range liquidity and souped the high, and SMT confirms that this is a high probability order block. So as you can see, this weekly candle confirms the CSD, but our draw on liquidity is still pending. So we are seller for the next whole weekly candle. And what is important and where to look for sell setups? This is the key. We will look for sell setups from that weekly order block, which is our higher time frame, POI. So we start on the monthly, then weekly, and now we drop down to the daily chart where we go to looking for sell opportunities. Again, change in state of delivery. We run on an old monthly high, and SMT confirms change in state of delivery. So what are we going to do next? We need to align a daily key level with weekly CSD. So over here we got a daily fair value gap, which act as internal range liquidity over here. And in this daily fair value gap, we need to look for raid on external range. And remember, we are seller for the whole entire weekly candle. So this is a Monday candle, and in that fair value gap, this Monday candle rated on that swing high. And this is the point where we should to focus on. And after the external range liquidity rated over here, within the higher time frame POI, which is weekly order block, and as well as daily fair value gap. And you can see after taking those buy stops, prices reach to our final target, which is monthly internal range liquidity, which is fair value gap. So this is how the price moves from internal to external and external to internal. Now you have seen what are the key checks and how to use them effectively. All you need is consistent backtesting and practice. If you apply these concepts just as I do, your entire trading career can transform. Stay disciplined, keep refining your strategy, and watch your results improve. Make sure to follow for more insights and join our Telegram group for exclusive discussions and updates. See you in the next video.